Welcome to Edolab Markets. Today we are going to read real charts, live, using Edo Reaction Zones. On a real chart, price almost never touches a moving average at an exact point and bounces. It approaches it, pierces it a little, hovers around it for a few candles, and only then bounces or breaks. So a moving average behaves like a region, a reaction zone, not a line. This indicator draws that region as it really is, 5 moving averages wrapped in bands that breathe with volatility. And it adds 3 coordinated reads, how the averages are stacked, which one price is testing right now, and what happened the last time price entered a zone. Let's break it down. The skeleton is 5 exponential moving averages, all configurable, chosen to span from the immediate trend to the underlying one. By default, the EMA 9, in lime, for the immediate trend. The EMA 20, in yellow, the short term. The EMA 50, in aqua, the medium term. The EMA 100, in orange. And the EMA 200, in red, the underlying trend. Line thickness grows with length, so the slow average stands out as the main reference while the fast ones keep the chart uncluttered. And the distance between them is itself a read of strength. Separated, ordered averages mean a powerful trend, like this one. Averages bunched together mean a market with no direction. Now the zones. Each average is wrapped in a band whose half width is the average true range, multiplied by a factor, 0.6 by default. Because the ATR measures volatility, the band widens automatically in turbulent stretches and narrows in calm ones. Unlike a fixed envelope, which would be too tight in a volatile market and too wide in a quiet one. Each band is tinted by price position, green when price is above the average, and the zone acts as potential support. Red when price is below, and the zone acts as potential resistance. With the 5 bands overlaid, the whole forms a kind of river, and its color and width tell you the health of the trend at a glance. Everything is condensed into this panel, drawn only on the last bar to keep the indicator light. Structure is the state of the stack, a bull stack here, and alignment is the exact score behind it, +4. Active zone names the average nearest to price and its current role, the EMA 9 acting as support, and DST ATR measures how far price is from it, in ATR multiples. And last react. Records the last resolved reaction, a bounce or a break, and the average where it happened. 5 rows, each colored by its state, and you can move the panel to any corner or switch it between dark and light. Let's look at that structure score in detail. The indicator evaluates each pair of adjacent averages. If the faster one is above the slower one it adds, if it is below it subtracts. With 4 pairs, 9 over 20, 20 over 50, 50 over 100 and 100 over 200, the score runs from -4 to +4. This chart is a textbook -4, a bear stack. All 5 averages perfectly ordered, the slow ones on top dominating the fast ones. A healthy downtrend. +3 or +4 is its bullish mirror, a bull stack. The panel always shows both the state and the exact sign number. Between -2 and +2, the structure is mixed, and that is exactly what we have here. The averages cross each other, the river loses its shape, and no side dominates, a market in transition, a range, or a doubtful trend. Mixed is not a weaker signal, it is a warning. It is the typical state of ranges and turning points, where reactions on the zones are far less reliable. The panel keeps it explicit, the state in gray and the exact number with its sign, so you always know how tangled the structure really is. Of the 5 averages, one is always the most relevant to price, the nearest one. That is the active zone, the average price is about to test, or separating from. The indicator measures the distance from price to every average, keeps the smallest, and reads its role: support when price is above, resistance when price is below. That distance is expressed in ATR multiples, comparable across instruments and moments. 0.05, like here, means price is practically glued to the average, about to react. 1.50 would mean price is very extended. Here price is sitting right on the EMA 9, acting as resistance, and the panel still remembers the previous reaction, a bounce down on the EMA 50. And now the heart of the indicator: what happens when price actually enters the active zone. Instead of assuming a bounce, it follows it. It records the contact, when the candle's range touches the band, noting which average was touched and in which roll, and then it watches the next candles inside a confirmation window, 5 by default. If price moves away from the average by at least the confirmation distance, half an ATR by default, and in the direction of the roll, the reaction is a bounce. Support has held, or resistance has stopped price. That is what the panel is reporting here: a bounce up on the EMA 9, price came into the zone, and the average defended the move. The opposite outcome is a break: the average was acting as support, but price broke below the zone instead of moving away from it. Here the panel says it plainly: break down. The reference gave way, and that is a very different message from a bounce. A bounce confirms the average still defends the trend. A break warns that the structure may be changing. And if neither the move away nor the break happens inside the window, the follow-up simply closes with no resolution. Nothing is guessed in advance. Every reaction is declared on the closed bar, so the reading never repaints. The settings are grouped by functional block. Let's open them. EMAs sets the 5 lengths. Reaction zones controls the bands, their visibility, the ATR length, the width factor, and the transparency, kept high so the bands never hide the candles. Reaction tracking defines the confirmation window, 5 bars, and the distance needed to confirm a bounce, half an ATR. And cross markers turns the secondary layer on and off, the small X's for the fast crosses, and the diamonds for the classic golden and death cross. At the bottom, dashboard controls the panel itself, whether it is visible, in which corner, and in which theme. The defaults work on stocks, crypto, forex, indices and futures, on any time frame. The one worth exploring is zone width: raise it for wider, more tolerant zones, lower it for tighter ones. We leave everything as it is, and close. Finally, the alerts. From TradingView's alert menu, selecting the indicator as the condition, you get 3. Reaction zone entered fires when price enters the active averages zone, the earliest signal, and the least confirmed. Reaction confirmed waits for the bounce to materialize, more reliable, and later. And stack structure change flags the turns of the stack, from mixed to bull stack for example, useful to detect regime shifts. All of them fire on bar close. We close it without creating anything. Read it in that order, trade with the structure, use the active zone as your reference, and wait for the reaction to resolve before deciding. Edo Reaction Zones is free and open source. You will find the full script on TradingView, and everything else on our website, www.edolab.io. This is Edolab Markets, and we'll see you in the next video.